If someone had handed you $1,000 in 1995 and said, put this away and don't touch it for 30 years, would you be a billionaire today? Spoiler, no, not even close. But the reason you don't end up a billionaire is way more interesting than if you had. Because there's an asset here that multiplied the money by more than 2,000 times, and even that doesn't come close to a billion. And that shows you something nobody tells you about how massive fortunes are actually built. Let's test 5 different ways you could have invested that $1,000 in 1995. One of them is going to disappoint you, one is going to make you mad, and one didn't even exist yet, which by itself is already the answer to the question in the title. Let me set the scene for 1995 because it matters. Google didn't exist. Amazon.com wasn't a store for everything yet. The company had just sold its first book online less than a year earlier. Windows 95 had just launched. Nobody was saving money thinking about cryptocurrency because that word simply didn't exist yet. Bitcoin wouldn't be born for another 14 years. Today's dollar buys a lot less than $1,000 bought in 1995. Adjusted for inflation, that would be the equivalent of more than $2,000 today. In other words, putting $1,000 in wasn't some small symbolic amount. For a lot of people, that was months of savings. So let's see what happened to that money along 5 different paths. Let's start with what everyone considers the safest investment in the world: gold. In 1995, an ounce of gold cost $387. Today, in 2026, after a historic rally driven by central banks buying gold like never before in history, an ounce has passed $4,100. With $1,000 in 1995, you'd have bought a little over 2.5 ounces of gold. Today, that would be worth about $10,700. It multiplied almost 11 times over. Sounds good, right? Until you realize that's less than what a lot of people earn in savings account interest over 30 years in countries with controlled inflation. The safe haven made you rich slowly, not actually rich. Second path, real estate. That classic advice your uncle gives at every Sunday lunch. In 1995, the median home price in the United States was around $130,000. Today, that same type of home costs an average of $412,000. That's an appreciation of a little over 3 times in 30 years, not counting maintenance, taxes, and fees, which eat up a real chunk of that return. If you'd bought a proportional slice of that market with $1,000, today you'd have about $3,200. Worse than gold. But here's the catch that real estate gurus love to hide. Nobody buys a house with cash up front. They buy with financing. And it's exactly that financing, leverage, that turns real estate into a mediocre investment, into a wealth-multiplying machine. It's not the property that's magic, it's the debt used intelligently. Hold on to that idea because it comes back at the end. Third path, no picking any single company, just buying a little piece of everything. The S&P 500 index, the 500 largest companies in the U.S. In 1995, the index closed around 615 points. Today, it's past 7,000. On price alone, that's already more than 11 times. But when you reinvest dividends over 30 years, which is what anyone would actually do in practice, that return jumps to 18 to 20 times. $1,000 in 1995 becomes somewhere between $18,000 and $20,000 today. Without picking a single stock, without luck, without staying up all night studying charts, just putting money into an index fund and forgetting the password. It's boring. It's slow compared to what's coming next, but it's literally the method that most genuinely wealthy people, not influencers, actually wealthy people, use as the foundation of their own net worth. Now comes the part that stings. Because in 1995, almost nobody wanted Apple. The company was on the brink of bankruptcy. Analysts openly said Apple wouldn't survive to see the year 2000. The stock price, adjusted for the splits that would happen later, was worth less than 25 cents. If you'd ignored everyone saying it was crazy and put in $1,000 anyway, Today, you'd have more than 4,000 shares of Apple. At the current price, that's worth more than $1.17 million. $1 million from an investment that at the time looked like the worst financial decision possible. The company that was going to fail became one of the most valuable on the planet. This is the part nobody tells you about getting rich from stocks. It usually looks like a terrible idea while it's happening. If it looked obvious, everyone would have done it. And now we get to the asset that basically invented the phrase, "what if?" One small detail. In 1995, Amazon wasn't even public yet. The IPO only happened in 1997, with the company still just selling books and nobody, not even Jeff Bezos himself publicly, betting it would become what it is today. But let's play close enough to 1995 and assume you bought as soon as you could at the IPO price of $18 a share. With $1,000 accounting for the 4 stock splits since then, you'd have more than 10,000 shares of Amazon today. At the current price, that's worth more than $2.4 million. That's more than a 2,400 times return on the original money. A company that sold books online became the backbone of much of the cloud running the entire internet today. And here's why the title actually makes sense. If I ask you, what about Bitcoin, the answer is simply that you couldn't. Bitcoin wasn't born until 2009, 14 years from our starting point. But the reason I'm bringing this up isn't just trivia. It's to show you that the single biggest money multiplier of the last 30 years didn't even exist when you made your list of safe options. There's a real story of a programmer who paid 10,000 Bitcoins for 2 pizzas in 2010. Today, even with Bitcoin having dropped by half from its recent all-time high, those Bitcoins would be worth more than $600 million. The biggest fortune didn't come from the most obvious asset. It came from something that didn't even have a name yet. Now, add it all up. Amazon, $2.4 million. Apple, $1.17 million. S&P 500, $19,000. Real estate, $3,200. Gold, $10,700. Even picking only the 2 best possible assets of the last 30 years, the 2 that almost nobody chose at the time, you get close to $3.6 million. That's a fortune that changes generations of a family. It's not a billion. For $1,000 to become $1 billion, you'd need a return of 1,000,000 times. No traditional asset has ever done that in 30 years. Not Amazon, not Apple, not Bitcoin. And here's where the uncomfortable truth lives. Billionaires don't become billionaires by picking the right stock. They become billionaires by owning a company from the start, not by buying a small slice of it on the stock market after it exists. Remember the leverage trick from the real estate example? Same principle, just applied to an entire company instead of a house. You don't get rich from the asset itself, you get rich from the machine that produces the asset. Jeff Bezos didn't become a billionaire by buying Amazon. He became a billionaire by being Amazon. The game of picking the winning stock can get you financial freedom if you have the patience and a bit of courage to ignore people telling you your pick is ridiculous. The game of building and owning something from scratch is what gets you $1 billion. You don't need to predict the next Amazon to build real wealth. You just need 2 things that anyone watching this video already has access to: time and the willingness to keep your money invested even when it looks like the dumbest decision in the world. If this video got you thinking about where you would put your next $1,000, comment below. Which of these 5 paths would you have picked in 1995? And be honest, in what year do you think you would have sold Apple convinced it had already gone too high?